So, number go up, then number go down. The last few days have seen crypto prices surging, mainly in response to good news about Ethereum's upcoming merge and the prospect of the Fed only raising interest rates by 75 instead of 100 basis points next week before heading off for a 2-month holiday. Small numbers make a big difference after all. So, is today's dip a natural correction, or is there something more sinister going on? Well, if you take a look at the headlines, you might identify one Elon Musk as today's villain, which wouldn't be that unusual after all. This is because yesterday Elon took time out from his attempts to single-handedly revitalise the birth rate to reveal that Tesla had sold 75% of its BTC holdings to realise almost $1 billion worth of filthy fiat. His reason for doing so was the ongoing COVID lockdowns in, where else, China, that are threatening to impact Tesla's production and hence its balance sheet liquidity. So, that's that. Case closed. Blame Elon. Well, perhaps not. Although BTC's price dipped on the announcement, it soon rebounded. Moreover, the sales happened long before the announcement took place, so it's not like we would really see any more sell pressure. Perhaps, finally, the crypto community has stopped jumping whenever the Doge father snaps his fingers. You see, there are other concerns weighing on the markets, which may be more responsible for the dip we're now seeing, and they are a lot more serious than Tesla's paper hands. This time, rather than watching the Fed, we should instead turn our attention to Europe. Today, the European Central Bank met in Frankfurt to announce a rise in interest rates. And while pretty much every other central bank around the world has been pumping the pedal to raise rates to a greater or lesser degree to try and get inflation under control, the ECB has been the exception. The reason for this is debt, the absolute mountain of it that several EU countries, such as Greece and Italy, are currently buried under. A hike in interest rates for the Eurozone could see these countries default, and given the nature of the European Union, this would have repercussions for all member states. So the ECB is kind of backed into a corner: raise rates and risk defaults, or do nothing and watch inflation soar. Well, just a few minutes ago, the ECB announced a 50 basis point raise, double what many market observers were expecting. Having done nothing up until today, Christine Lagarde and her crew have now accepted that they must take some affirmative action against inflation or face the consequences. The catch is that this 50 basis point raise only brought interest rates up to, wait for it, 0%. That's right, interest rates in the Eurozone are still at zero, having previously been negative, and this might be why the news didn't shape up the markets as much as some investors were expecting. Even so, if the ECB continues to hike rates, and it probably will, then the question turns to indebtedness. Which sovereigns and citizens have the most debt? Already, countries in southern Europe are once again at the forefront of this question. Could these rate hikes cause another Eurozone debt crisis? Because I'll remind you that the last time the ECB hiked rates back in July 2011, it sparked a debt crisis, and the ECB then decided to reverse course only 3 months later. Food for thought. In the meantime, the euro is rallying against the US dollar, but something tells me this rally will be cut short when the Fed responds in kind with its own interest rate hike later next week. Then there is a genuine villain lurking in the shadows: Vlad the Invader himself, President Putin. As you may have been aware, he is currently holding Europe hostage over its dependency on Russian fossil fuels, and with winter on the horizon, his leverage is getting stronger by the day. The most pressing issue is the Nord Stream gas pipeline, which supplies much of Europe's gas and was recently shut down for routine maintenance. Despite fears that the Russians may not turn it back on again, it has now reopened, though at a reduced capacity. The picture is clear though. Putin has the power to turn it off whenever he pleases, which, in the depths of winter, would signal catastrophe for the European economy. As rising energy costs fuel inflation in Europe and beyond, the picture is looking increasingly bleak. And once the temperature starts to drop, it's going to get a whole lot bleaker. So, while some may argue that the United States could possibly avoid a recession, in Europe, the big R is pretty much a nailed-on certainty. So, from where we're standing, it's these concerns that could well be causing the crypto market to wake up and smell the coffee after a few days of green frenzy. Remember, this bear market is still very much a thing, and the macro factors driving it are nowhere close to being resolved. While relief rallies like the one we've just seen are always welcome, treat them with caution, because these days, what goes up usually comes back down pretty damn sharpish.